Well, hello, everybody. It's Blair Nightingale here coming at you Market Monday. I'm giving you a recorded version tonight because I want to get you some live market time, and we want to make sure lots of things going on over here at Tradeway. And I've just been traveling in and out, and I wanted to make sure I got you this Market Monday time. I love spending this time with you guys out there. So we're going to go and dive into the market today. And like I said, we're going to get a look at what's happening live. I want to help you understand where we're at in this market season specifically because the markets are crashing, right? Markets had a pretty rough week last week, and we're continuing on the downside today. So you can see that popping up here on the chart. We, in our last update, actually started to see the S&P, which is what we're looking at on the chart right now. Looking at the S&P, it definitely attempted to put in a bottom, right? We got a bottom here. When you start to see a higher low, that's what you're looking for in a reversal, okay? What you're looking for in a short-term technical reversal is you're just looking at simple, what we call technical indicators, or price indicators, really, where I'm starting to see a higher low. And then it took off, right? We took off. We got a nice uptrend in here for about, what do we had? We had about a month and a half, maybe almost 2 months. And then that failed and started to get into a bit of a pennant wedge. We're making lower highs, but we're making higher lows at the same time. The market's undecided. Now, this is where a lot of people got faked out. And this is why we talk about confirmation on breakouts. Confirmation on breakouts. This day here, let's zoom this guy in, shall we? This day here, we had a big breakout, and the next day, a big reversal. Okay? Big reversal. I like to see these kinds of trends break out, pull back into new support, and then follow through again. The earlier you take the move on a breakout, you put yourself in a position for more profitability, but you also put yourself in more risk. So if you're going to do something like that, consider having, obviously, the most important rules in place. Where am I going to cut my losses? Managing position size well. Things like that are really important parts of trading. And those are the parts you and I can actually control. Right? We can't control what the price is going to do. That's not the job of a trader. But we do want to control the amount of risk that we choose to take, right? Of course, the other side of that is that if I don't take the initial move and it really takes off, yes, I'm going to miss some of that price action. So I could look to maybe scale into the position. I start with a smaller or a starter position size, and then I actually add to that position as it begins to follow through. Of course, depending specifically on what it is that I'm trying to accomplish. But if I'm looking to go out there and buy stocks, I don't have to buy 100, 200 shares right away. I can scale in as that continues to move in my direction because I know I'm taking a more speculative position when I get in early on a breakout. Now, I will also add something else. Right here was pretty significant news. What's the news been? Well, we're in a bear market, folks. So news is something we've always said here at Tradeway. Market tone is important. Is the tide coming in? Is the tide going out, right? We want to move with the momentum. We don't want to go against the momentum, right? Momentum shifts, but we want to try to get a sense of what it is and move with it, not against it. Right now, news is such a huge part of that momentum, right? The fundamentals of our economy are so unstable in some ways, with the Fed changing interest rates as much as they are, with inflation. We're watching for a shift in employment. That's typically something that is a big deal in a bear market or recessionary conditions. What's interesting is right now, in our economy, that hasn't been a huge issue, which is part of the reason we haven't, in my opinion, seen a major capitulation to a crash, because we're still not really seeing folks, at least not on a large scale, lose their jobs. We've come into this recession that we're in now, and we are in a recession despite what politicians want to reword and change and say to us so we can hear what we want to hear. No, what we want to hear is the truth. And the truth is we are in a recession. Now, is it a unique condition for this particular time? It is, because, like I said, the unemployment is not really in that tipping point as of right now. But major recessions don't necessarily have to come from the unemployment hitting hard and fast right off the bat. There is definitely more of an economic storm brewing with these interest rates going higher and higher in order to get a hold on inflation. Inflation is going to work its way through the system. And if companies start to lose enough money, they will start downsizing on their employment, right? On their workforce. The dollar, right? The dollar is also surging. I was looking at the dollar to the US pound, or this US pound, the British pound yesterday, 95 cents, 95 cents, almost parity, almost par with the British pound. Not a bad time to be going to London. If you had that in mind, right now would probably be one of the best times in a very long time for you and I to go and see Europe, because at least economically speaking, the dollar is very strong. However, as that dollar gets really, really strong, it does affect global trade quite significantly, because the US dollar is the global reserve currency. It's the most used currency for transactions in business and between governments all around the world. So this all has an impact. And what's happening right now, as you can see on the chart, 1, 2, 3, 4, 5 days down, right? After just one minor day up, we're what? Well, let's zoom out here, guys. We are back down to these lows, right? We hit that on Friday and got a nice bounce up, and we've given it up already, and we're right back to there. So as we speak, it is, let me check. It is 12:42 Central, 12:42 Central. And that means we've got till 3 o'clock on the market. So the market is open and live right now, and we're knocking right on the door of a pretty major low. We hit this low back in June. And if we are to give out here, right, that would be a breakout. That's going to break out, right? It's not breaking out from a wedge pattern like I mentioned earlier, but it is breaking out under a major technical support level that we had back in June. Major lows on this daily chart are significant, and this is one of those major lows. The problem is that the Fed is continuing to raise rates. You've probably heard myself or anybody else here at Tradeway talk about this a lot, okay? They're raising rates, and that is causing the stock market to drop, because the stock market is anticipating that there's going to be a slowing of growth. The reason they anticipate a slowing of growth is because money is flowing less freely, right? Less freely because it costs more money to get money. When the interest rates are low, it's cheap to borrow money, right? You're paying 2.5%, 3.5% on a home loan, okay? But now people are paying 8 and up. Now, sometimes a little less. I talked to a real estate agent that I know about 2 weeks ago. She said she just closed a house, 8%, right? 8% she offered that, or that person closed the house on. So that's significant. They're going up. They're not at the highest they've ever been, interest rates, but they're going up faster because of the Fed than they've ever gone up before. So the pace is very high. We call this this intention to raise interest rates without triggering a recession and a stock market crash, which, by the way, we're down 25% from the highs in the beginning of January already, right? Your stock portfolio is, in so much as it's exposed to the S&P 500, is down about 25%, right? That's a significant amount of your earnings. And one of the conversations that we try to have here at Tradeway, in fact, we do have it regularly. I try to have it here on Market Monday as well, is that you and I need to understand how to manage our own money. We have to, at least by knowing what kinds of questions to ask the financial advisor that we pay fees to put us in the market and manage the money for us. You say, well, I got a guy managing. And my question is, okay, what's the management style? Because what I hear from a lot of folks I meet around the country is that the guy they're paying to manage their money doesn't really do much management. The management is that you were put in the market and that's it, right? You pay fees and you're in. It's not very hard to get in the stock market. I'm going to tell you, in 2022, the markets are so liquid. It's so simple, accessible, easy to get into the market. That's not what we need to be paying somebody for, right? What we need to be doing is learning how to manage the money well while it's in the market. So we're not giving up 25% of our money, whether it's short-term or long-term money, right? I definitely don't want to give up 25% of my retirement, but I don't want to give 25% of my short-term money either. Okay. If we take out this low at 36.50, which is where you see that line on the screen right now, where are we going to go? 28, 30, 35, 40, right? The last two crashes average around 50% from the highs. Keep in mind that in the stimulus that came, let me change the chart here, after COVID, look at the amount of appreciation we've seen here, guys. This was largely artificial. I like to say, what happens when a college student gets real tired and then just drinks Red Bull to keep going? They're going to go, right? They might go all night long, but they're going to crash, right? Now you say, well, that's maybe a bit of an oversimplification for the complexity of economics in the US economy. Yeah, it doesn't tell the full story maybe as to the nuts and bolts, but it tells a pretty good story to say that when we extend things way beyond the fundamentals based on stimulus, which is what caffeine is, it's a stimulant. Well, that's all we did. We stimulated by printing money and buying. The government was buying assets. So I'm giving you this whole rundown today because I want you to understand that the risk of us going significantly lower from here is significant. It may not happen. I don't have a crystal ball, but I tell you what I do have: preparation, right? A plan, preparation and a plan for whatever does happen, right? So if you are at this juncture going, well, number one, I have some money at risk. I'm talking to you today, right? I don't really have any money at risk, but I've heard you can actually make a lot of money in bear market crashes. Then I'm talking to you too. And there's another group I'm talking to, which may be people from the first two examples. And that is, I heard that after a recession, there's a lot of opportunity in stocks. Think about what happens in a recession. Think about what happens in a stock market crash. Prices reset. Prices reset. They go back down and they're cheap. Great companies on discount. Buying stocks at a premium is what people have been doing for the last, year. And then some. PE ratios, very, very high. Price to earnings ratios. Price to earnings ratios telling us not just what the price per share of a company is. That's the cost. But is the cost reasonable compared to the value of the company? Right? That's what a PE ratio tells me. And what they've been is astronomically high. Well, those are starting to come down, right? The prices of stocks are coming down closer to the value of those companies, which means you could still look to get great companies for both long-term growth and short-term explosive trading, right, as prices reset. So you and I need to learn how to do this because we need to know how to be protected in a crash. We need to know how to use that crash to our advantage. And we need to be ready. We need to be ready for when stocks are beginning to bottom, which they are not yet. We are not there, right? This would be a very suspect place to start to really load up on stocks, right? The old saying is, and I'll finish with this today, we don't try to catch a falling knife. What happens if you try? You're probably just going to cut yourself. Let it hit the floor and stop. Then pick it up. That's what we do with stocks as well. And you and I definitely want to be ready to handle the season we're in, the crash that is very potentially coming, right? And we've already crashed, as I mentioned, 25%. That's a big move, right? But we really haven't hit a major recession yet, and we could, right? This is what we call a hard landing, not a soft landing. The Fed raises rates, cools inflation, but doesn't send us into a recession, soft landing. The Fed raises rates, cools the economy, but triggers a recession. That's what we call a hard landing. Many big names, CEOs, and voices on Wall Street are starting to say more and more the chances of us getting a soft landing are diminishing more and more and more. You and I don't need to know. We just need to be prepared. We do that, tradeway.com. If you've never taken our Step 1 Start Your Journey event, head on over to tradeway.com. Right on the main page, you can sign up for our Step 1 Start Your Journey class and begin to learn how we approach the markets and how you can know when this market is really crashing, what to do, and what to do when it begins to turn around. We don't have a crystal ball to know exactly when the bottom of the next bull market is going to be, but there are some very good fundamental and technical indicators, right? Signs for you and I to watch for that are not complicated. They really aren't complicated, so that you know, hey, I don't know exactly what the bottom's going to be, but I know that this is what tells me the season. See, we don't necessarily know exactly when the season of fall is going to hit here in Dallas, Texas. Changes a little bit every year. Yeah, we got a date on the calendar, but it doesn't really follow that date on the calendar. So even though I don't know the exact date, as the days go by, I'm able to tell, oh, there's signs in nature, in the weather, in the temperature. Things change, and I'm able to say, oh, now this is fall. That's true in the stock market as well, but you've got to learn what to look for, okay? We will teach you that. Step 1, start your journey. I hope you guys will join us there right on tradeway.com. Thanks so much for joining me tonight. This is an important market update. If you need anything, you can always reach out to us, support@tradeway.com. If you're on Facebook, make sure you like. If you're on YouTube, go ahead, ring that bell, subscribe. You will get updates from us for everything that we're doing throughout the week right here on Tradeway. So appreciate you guys, and we'll see you next time.